Hey everybody, good afternoon. This is Sammy from the Strategic Swing Trader and the Black Room. Just wanted to come on the mic and talk a little bit about the market. It just so happened that I discussed at length in the Black Room yesterday how market tops and bottoms happen, and I spent probably no less than 30 minutes, maybe 45 minutes in the afternoon yesterday just talking about how sometimes it comes without a setup, like the market is going sideways at all-time highs. You wouldn't think we would be topping out, would you? I wouldn't. I would say no normally, and then you get the next day it crashes and then it goes lower from there. I went back. I just want to show you what we did in the black room yesterday. I went back. I couldn't go back on that platform that I was showing you on Realtek far enough. So I went, I have this other platform. I went back to 2007 when we bottomed. No, I'm sorry, 2007 when we topped. And to show the way we topped in the Q, this is the NWL. Here's the Qs, 2007, right? And then the top later on. So here's the top. I mean, that's all out bullish, right? This is all out bullish. And then we broke out, failed, and then from there we topped out. We retested later on, I think. No, that was the retest. Here's the original top. 1 second. Here's the original top. This is the original top. This is it. Would you believe if I told you this is how we topped out in 2007, October 2007? Would you believe that that's how we topped out? That's it. That was the top. And then we retested. We didn't quite get up to 54, just broke out here. I still remember this day vividly because everybody thought the market was higher. We broke out, and then the next day we negated that breakout and then failed, right? And then from there we just dropped and dropped and dropped. Let me now go ahead and show you how we bottomed. So we lost 50%. That was only the second time. Well, for the Qs, it was the third time since the Great Depression that we lose 50% or more. Let me show you how we bottomed. It was in late 2008. Late 2008. Here it is. Just want to show you. This is how we bottomed. All out downtrend. Okay, a little bit of acceleration. And then from there we bottomed. We retested on March 9th, 2009, and that's how we bottomed in a very, very casual way without any signals. What am I talking about? Usually when we bottom or top out, you get acceleration. You get a severe sell-off and then a vertical drop, right? That's how it usually happens. But as you can see, it didn't in this case. And then from there, we went up 600%. I mean, today the Qs is at 181%, $181. We bottomed at 25 something, 25.60. And then from there, that was the bottom. So why am I showing you this? Well, because yes, this doesn't look like a real top to me based on the trend. We don't have any acceleration, but sometimes that's how it happens too. So you have to be prepared for it. And let me go back to the other platform, which I like more. Let me show you the weekly. I mean, that is all out bullish. And yet, part of me is always thinking, hey, it could be the top at any time. I always have to be prepared. Okay? How do you prepare? You position yourself to make money, whether the market goes for you or against you. How so? By playing things that are fundamentally sound, that look good, and no matter what the market does. Today I made my money playing long. Let me show you. See this? Lulu, 2,500 bucks. Long, not short. I mean, the rest are very small, but you get the point. Why? Because the Lulu was positioned high. I mean, it looked good higher. Base breakout. I was already in it from a couple of days ago, and today gapped up. Perfect. And unfortunately, if we were on a different day, Lulu would probably be already at 120 today, not at 112, but the market totally crashed. I mean, the Qs is down 2.5%. It's by far the biggest red bar I see on the entire chart. I'd have to go back, I don't know how long, to February, March maybe March, to see a 2.5% bar, a move, right? So and I made my money playing long because I was again in a position that no matter what the market does, to some extent, I'm gonna make money. So that's my defense against it, against the market. There are different ways to hedge to protect yourself, but the best way, in my opinion, is to be doing what you're supposed to be doing, to be buying the longs that look perfect, that look independent from the market, right? Look at the Qs, all out sloppiness, and look at for example, the Lily, not Lulu. Did I say Lulu? Lily. Look at the base plus a shakeout. That doesn't care about the market, right? That has nothing to do with the market, almost. So that's to me how so when I get asked in the room, in the black room or the strategic or in the strategic swing trading program, when I get asked, like this afternoon, I got asked, should I keep Amazon overnight? To me, if it doesn't have a setup, I'm not keeping overnight because it's just going to go with the market for the most part. Things that don't have their own unique setups, your unique patterns, don't usually they usually are affected by the market. And I don't do that. I want to also show you, we talked about this in the black room yesterday, how we have yesterday before the crash, how we have divergence. I wasn't planning to do this video, to record this video today. I was actually planning to record a different video for you about the moving average, how to use the 20 MA. I did a video last week about the 200 period moving average, which is this one, and it was very, very popular. And I thought to myself, the 20 MA is me than the 200. So, and the video that I did on the 200 MA was off the cuff. I didn't have any notes prepared. The 20, I use it in so many ways that I really do have to prepare a few things to just write down a list of the uses or the different ways I use the 20 MA. One of the ways in which I use it is to look for divergence. For example, the Q's price moved up, moving average went sideways. That's divergence. Usually you get a snapback. We see it in the Qs, we see it in the SPY, same thing, right? We see it also, better yet, look at Apple, made all-time highs. Now, did the moving average make all-time highs? Did it, is the moving average here any higher than it was here, let's just say? No, it's not. Is price higher here than it was here? Sure it is. So that's divergence. You typically get a snapback, okay? Or you get a consolidation. Usually a snapback, but sometimes also if the stock is really, really bullish, you get a consolidation, in which case the moving average starts to curl and go back up and catch up with price. So yesterday I started to talk about the market tops and bottoms is because I saw the divergence and because it just the market doesn't feel right. There's something about it that doesn't feel quite right. I own a condo that I'm thinking about offloading. And if you look at the real estate market, here's the IYR. If you look at the monthly, that doesn't look good. For the first time, we broke the uptrend by making a lower low, but now we're also making a lower high on the monthly. And then I think the VNQ, is that the Vanguard? I like it even more than the IYR. It's putting in a solid lower high now. So it's definitely an interesting time in the market. It's a very, very tough call. If we had some kind of acceleration, let's say we went up vertical, then I would say, yeah, that's the top, right? But when you break down from a consolidation like this, it's extremely difficult to try and predict whether this is the top or not. The best defense is a great offense. Isn't that the saying? You hear it all the time. We say it all the time. The best defense is a great offense, and that is again to be positioned, to be in plays that are independent of the market to a large degree. I'm trying to go to the weekly chart to show you how bullish the Qs looks on the weekly chart, and yet that's kind of how it looked on the daily chart in 2007, except to the downside in 2009 when we bottomed, and yet we just kept going, right? So we could again, the larger picture is not really indicative of a top, but always keep in mind how we bottomed and how we topped in 2007, how we bottomed 2009. It's a great, I really highly recommend when you're looking at charts, not just the market, individual stocks, to go back and look at how the trend started, how the trend ended. You'll learn so much. You'll learn so much about chart reading, about price action, about how trends are formed, how bottoms are set, how tops are set, created, by just going back. And if you see something impressive, or you see a chart that you like, just go back and look at how the trend started or how the old trend ended, right? You learn so much. At any rate, I hope you're having a fantastic day, and just stay careful. Be careful out there. Take care, everybody.